Hello, ladies and gentlemen. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. First of all, I would like to apologize for coming in a little bit, much more later than expected, actually, as we were trying to sort out some technical issues, and unfortunately, we were not able to get over it. But I'm still very glad that we are able to come up. So you will not be seeing my face this morning. So please bear with me. I hope things will get sorted out, and by the next session, we will be here again as usual to run through our daily routine. So I'm so excited to be with you this morning. In fact, I was thinking that this might not be possible this morning due to the fact that uh, I'm very glad that we started this morning. Actually, it's a very important day, the first trading day of the week, where we need to actually do a detailed understanding of the behavioral patterns of market participants so that we can have a perspective that will guide our trading decisions for this week. So once again, you're all welcome on board and glad to have you around with me this morning. And for those of you who are joining us for the first time, you're highly welcome on board. I'm very glad to have you around with us this morning. And I know you will be wondering what this is all about. What is it that we do here on the Forex Morning Mastery? Well, on the Forex Morning Mastery, we come together as a community where we review our trading positions, our existing positions in preparation of New York session. And we do this 3 times in a week: Mondays, Wednesdays, and Friday. And as usual, okay, I see your voice is low. All right, thank you very much, Adeni Babalola. I really appreciate that. So let's see what I can do about that. And okay, so I just hope that it is quite okay right now. Please, if it's not, I'll suggest you probably restart your YouTube app maybe, and let's see how that comes out. Please let me know in the comment section, and thank you very much for your feedback. So this is what we simply do here, and my aim, so we are not a signal service platform. Instead, we are here to have a detailed understanding of the current market structures on the asset we are looking at, with the utmost intent of digesting the historical data to give us an insight into how we will be position ourselves strategically for the next move. So I welcome you guys on board and encourage you to actively engage in the comment section. So with that being said, the asset we are going to be looking at for this week is 3 as usual. The first one is the USOILSPOT. So please give me a moment, please. So the first one is the USOILSPOT, where we did tremendously well last week. So we are going to be looking at the asset this week again to see how we will be strategically positioning ourselves for the next move. Then the GBPUSD is going to be part of our watch list today, and as well my favorite, of course, the XAUUSD, popularly known as the gold spot. So these are the assets we are going to be looking at for this week, and in preparation for today's session, I've done a comprehensive analysis on this asset, and I can't wait to share with you what my ideas are and how we intend to plan for this week. And for those of you who I shared only one video during the course of the weekend, and that is the XAUUSD. So you need to watch that video to have a background knowledge of what we are going to be deliberating on today, as we will only be talking about deliberating on the 1 hour time frame. However, for the other 2 assets, that is the USOILSPOT and the GBPUSD, we will be doing a top-down analysis, so you have a privilege of seeing how we will be strategically positioning ourselves for the next move. So with that being said here, let's dive right into the business. And as usual, the first thing we normally do every morning is to keep tabs with the fundamental factors that will be influencing the sentiment in the market. And as usual, we will be checking on the economic calendar, where we tend to pinpoint potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information and, of course, timing to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after this economic event. Now, based on the asset we are going to be looking at for this week, we will be focusing, usually we focus on high impactful event from the economies that influence the asset we are looking at, which is the United States and of course the United Kingdom economic docket. However, if you look at this morning, Monday, May 6th, we do not have any high impactful event. And considering the fact that today is the first trading day of the week, we do want to have an insight into what may likely drive the sentiment in the market. And in that regard, we had to look at the mid-tier economic features. Now, if we look at the mid-tier economic features from both economies, we have about 4 of them to look out for. And the first one here is a speech coming in from Fed officials. That is Fed back-in speech, which is coming up in about 12 hours thereabout from now. And of course, the Fed Williams speech coming about in about that same time thereabout. And the importance of this event is that it will be giving market participants insights into the economic outlook of the United States and of course the trajectory of monetary policy for the Federal Reserve, which is the backbone of guiding the dynamic of the US dollar. So we will be looking forward to this event actually. So this event here will be giving us an insight. So I encourage us all to mark out the timing so that we can be around together to see how the market is going to anticipate and most importantly react to this event. Then later on today, I want to be looking forward to the BRC like-for-like retail sales, which is coming in from the United Kingdom. This is coming much more later in the day. It's about later in the day, in about how many hours now? About 13 to 14 hours from now. And for those of us who do not know, this is a data that that measures the changes in the actual value of retail sales from participating companies with invaluable management information on regular and reliable basis. So it gives us an insight basically into the retail sector of the United Kingdom, and a high reading is considered to be a positive signal which could incite a traction in favor of the pound sterling, while a low reading will be considered as negative. Now, if we look at the previous data, that is for the month of March, it came in at 3.2%. And compared to what we have right now, consensus, that is economists and market, is expecting that the actual data will come in at 1.6%, which is a little bit lower than the previous month data. So it's not an encouraging expectations anyways, but we still look forward to see what the actual data will be like. So these are the events we are going to be looking forward to this week. For today, and depending on how the market participant anticipate or react to this will reflect on the chart as price action. So with that being said here, let's dive right into the business. So I see your comments, Adeni Babalola. Thank you very much. I really appreciate your support. Thank you, and I thank you for the feedbacks too as well. And with that being said, let's dive right into the business. So as usual, the first asset we are going to be taking on this morning is going to be the USOILSPOT. And in fact, I do have an interesting setup this morning. I already have a position triggered, and I do hope that we still have the privilege of joining this position. So let's look at this quickly. Remember last week we were selling the US oil spot. We sold the US oil spot all the way into the $78 zone, maximizing some substantial profit, and this was as a result of the increase in crude oil stockpile as reported by the API and the EIA. And we all know what happens when there is a high an accumulated crude stockpile. It shows that the supply is higher and that demand is not strong enough to eat into the supply. And besides that was the easing geopolitical tensions in the Middle East. And in fact, I have a couple of highlights, market drivers that we can look at this morning to see what will be influencing the sentiment in the market for this week. Now, looking at this, I think I have it right here. Hold on a second, please. Hold on a second. Okay, so So I have a couple of market drivers here that will be influencing the sentiment in the US oil market, and one of the most important one here is the impact of the Fed's monetary policy. And last week we got to know that the US Federal Reserve left interest rate unchanged amidst persistent inflation, and the Fed's stance of not cutting interest rate until it has greater confidence that inflation is easing sustainably to its 2% target may influence oil prices. Now, a higher for longer Fed stance could potentially lower demand for oil as economic activities would decline. So what does this simply mean anyways? Now, if the what's it called again? If the interest rate is kept higher, what happens to the US dollar? The dollar increases in value because it becomes an attractive window for investors to bring their funds into due to the differential in interest rate. So when the dollar becomes high in value, it becomes, since the US oil is a US dollar denominated asset, it becomes expensive for other assets for other currency to buy the US dollar in an attempt to gain the US commodity. So in that regard, demand usually drops. So this is what this simply means. Then another event that influenced the sentiment in the market last week was the US Energy Information Administration EIA report, which reported an unexpected increase in US crude inventory for the week ending April 26, and we had a rise of about 7.256 million barrels, contrary to market expectation of a decrease by 2.3 million barrels. Now, this data suggests a higher than anticipated supply levels, raising concerns about weakening oil demand. And of course, we know our simple economics, when there is a high supply and the demand is low, what happens? Price will definitely drop. So these are one of the factors that influenced the sentiment last week. Now, the other factor which we have been talking about week in, week out is the geopolitical factors, that is the geopolitical tensions in the Middle East. And as it is from last week's update, we saw signs of easing geopolitical tensions in the Middle East, particularly the prospect of a ceasefire between Israel and Hamas in Gaza, which have contributed to narrow trading in crude oil prices as the concerns for oil disruption from that particular area has gradually reduced. So market participants will still remain vigilant, looking forward to see what will happen between Hamas and Israel. We have positive development over the weekend, so we still look forward to see what will happen for this week. If the tensions continues to reduce, to ease, then it is very likely that price of oil will continue to the downside. However, due to this uncertainty around the geopolitical tensions in the Middle East, we still need to understand that things could change abruptly, unexpectedly, and could incite some positive signal for buying the US oil spot. So we are going to take all of this into consideration while we review the current market structure. However, before we do so, let's run through the higher time frame so we can have an holistic perspective into what is really going on from a long-term scope, and then use that to guide to understand how market participants are weighing the options behind the scenes. Now, looking at the daily time frame, for instance, the first thing I was able to observe here is the fact that since the beginning of the year, price action has been bullish. As you will see, the market has consistently found higher highs and higher lows, giving us a beautiful ascending trend line to work with. Now, besides that, you will see that last week's trading session closed exactly at the end of that ascending trend line, giving us a signal that we are at a crucial juncture in this particular market. Now, will price action break down this ascending trend line to incite a sell-off, or will price action maintain the momentum above this ascending trend line to continue the uptrend that started this year? And you know how we use our ascending trend lines in this community. As long as price remains above the ascending trend line, we definitely want to be looking out for patterns and structures that support the idea of buying, and we are not going to be considering selling unless the ascending trend line is breached and broken to the downside. Now, to guide our decisions going forward, I have a simple setup on the 4 hours time frame, which we will be using to manage the current market dynamics. Now, right here on the 4 hours time frame, what I did was to take into consideration the character of price action in the last 1 month, I think, since the beginning of the month of April. And you will see that despite the strong bullish momentum since the beginning of the year, price action had consistently found lower highs, which may be as a result of profit-taking activities or a retracement of that impulsive bullish move that started this year. Now, after connecting the series of lower highs here, we have a couple of descending trend line to work with. Now, we have the first one right here, and we have the second one right here, which obviously has been supporting the bearish move. Now, in addition to this descending trend line is our key level for this week, which is situated at the $78.50 level. Now, if you look at this key level for the last 2 to 3 months, this level here had played a significant role in determining the direction of price action. As you will see here, it was a selling niche throughout the month of February, and then it was during the month of March we begin to see some bullish traction around this area, though it was more of a little bit of consolidation phase throughout the month of March before it finally broke out of the structure during the later part of the month of March. And since then, price action has remained above the structure, and not until last week we saw price action come back into that particular structure, which beautifully shares a confluence with that ascending trend line we identified on the daily time frame. Now, you would agree with me that we are at a crucial juncture in this market where, depending on how price action reacts to this key level at the $78 level, will determine if we are going to be buying this asset this week or selling if price remains below both the ascending trend line and our key level. So this is the structure we will be using, and to really have a better insight into how market participants will be reacting to the $78.50 level, we will need to scale down to a much more lower time frame, and that will be the 1 hour time frame, which is our execution time frame. Now, when we scale down into the 1 hour time frame, the first thing I did observe here is a structure like a descending channel, which started since the second half of last week, that is since the beginning of this month, And if you look at that structure closely, you will see that we had a descending channel. Now, connecting the series of lower highs, we have the resistant line of the descending channel. And when we connected the series of lower lows, we had the support line of that descending channel. Now, if you look at the structure here, you will see that price action tested the support line a couple of times, whereas the third attempt failed as price did not come even close to the support line. Now, what does this tell us? It tells us that buyers are building up momentum. And for me, I wouldn't say this is the beginning of the second leg of the bullish momentum that started this year, because I remember last week was more of a strong selling niche, and the bullish pressure we're seeing here may be a retracement of that bearish leg that's happened last week. And considering the fact that price action is still trading below the descending trend line, well, this bullish expectation here could be a that impulsive. Now, looking at what happened here since the beginning of this week, you will see that the week has started on a strong bullish note. As you will see here, price action started, hold on a second. So price action started at around the sorry, this is $77.80 area. That was a typographical error, so let me just adjust that appropriately. So we have the $77.80 area, and we have the $78.35 level. All right, so hold on a second. $78.35 level. All right, so you will see that price action started around the $77.80 level this week, and then it continued up. And as soon as it tested the $78.35 level, we had a new resistant line for the week, giving us a range bound structure where price action for the first 1, 2, 3, 4, 5, 6, 7 hours of the week, price action was confined within the $78.35 level and the $77.80 area. And you know how we use our range bound structure at the beginning of the week when we identify them. Well, it's a simple signal that the market was a little bit choppy. That is, there is an indecision at that point in time. Hence, we want to wait for a signal of either a breakout of the resistant line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. And look at what we have here. Price action did break out of the structure. I already positioned myself. In fact, I have 2 buy positions running at this point in time. As you will see, both the 78 and the key level at the $78.50 level shares a beautiful confluence with the rest of that descending channel. And when price breaks out of the resistance line, it's a signal that buyers may likely be taking over the market anytime soon. Now, for those of us who had missed out on this opportunity, it's okay. It's still the first trading day of the week, so we still have enough time to capitalize on trading opportunities. And in fact, this move might not be the momentum for this week. So I already moved my stop losses to secure the position actually. So for those of you who have been with us for a long time, who understand the dynamics behind our analytical approach and who have taken advantage of this opportunity, well done to you. Kindly move your stop losses, secure the current position, as we never can tell sellers could stay coming anytime soon. Now, for those of us who are yet to capitalize on this opportunity, well, let's exercise patience at this juncture and wait to see if the market will come back and retest the structures that was broken. It could either come into the $78.50 level or the $78.35 level on the resistant line of that descending channel to incite an uptrend continuation. So I would encourage us all, that is for those of us who missed out on this opportunity, to exercise patience and wait for the structures to mature. However, if price does not drop, because it's not all the time the market comes back to retest structure and it continues to climb and find new highs, well, we have another level at the psychological area, which is the $79 area, to maximize the potential of this bullish move. So if price does not come down to retest structure and it continues to climb and find new highs, well, we have the $79 level where we shall be looking out for more opportunities to join the uptrend move. So having your buy stop order above that structure makes quite a lot of sense. And for those of us who are joining us for the first time, who are not part of last week's profitable journey, I would encourage you to wait for retest to structure before jumping into any positions from there. So this is my expectation on the potentials of buyers in this particular market. So at this point in time, the perspective is still looking bullish, which is more or less a counter trend opportunity. However, in as much as we look out for buying opportunities, you know how we do it in this community, we also want to take into consideration the potentials of the sellers. What are the conditions that will make us feel comfortable selling the US OILSPOT today? Remember, this market has been on a strong bearish tone for the last 4 to 5 weeks, and with the potentials that sellers could still take over this market could come anytime soon. Now, based on the current structure we have here on the 1 hour time frame, as we had a range bound structure between the $78.35 level and the $77.80 area, I do have a sell stop order just right below the $77.80 area to continue the downtrend move. So if price breaks down that structure, I will be joining a bearish move from that point. However, if the market gives us a signal that sellers are getting stronger along the line, that is, if price action finds lower series of lower lows and lower highs below the key level at the $78.50 level, giving us continued and persistent selling pressure, we could actually join before the breakdown of the $77.80 level. However, trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So if there's any new developments that states otherwise from what we've discussed here, I will definitely give you updates. So this is my simple view on the US OILSPOT. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next financial asset on our watch list. So stay tuned in, and of course use that time to mark out these levels accordingly on your chart. See you on the other side. All right. So, in the absence of no questions, I do want to assume that we are all on the same page at this point, and I do hope you've marked out these levels accordingly on your chart, as we will be needing them as a reference point to guide our trading decisions for today. And in fact, if you have found this content helpful and useful in helping you make your own independent trading decisions, kindly give the video a thumbs up. Your likes are valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find the content beneficial. And this is the token way for you to support this channel to grow, and thank you very much as you do so. So for those who are clicking on the like button, thank you very much. You guys are wonderful, and I do really appreciate. I see your comment, Soldier Pete. How are you, Pete? How are you doing? Oh, you're from Thailand. Glad to have you around with us this morning. Trust you're doing very, very well. So, in the absence of no questions, I want to assume that we are all on the same page. And in that regard, let's move on to the next asset on our watch list. Stay tuned. So the next asset we are going to be looking at this morning is the GBPUSD, and in fact last week was another profitable week for us on the GBPUSD, as we did capitalize a couple of buy positions during the course of the week, and during the later part of the week we also joined that strong bullish momentum before the NFP data came in, giving us a choppy market conditions, taking us out of all buy position. And as the new week began, the GBPUSD appears to continue its upward momentum, extending its winning streak for the fourth consecutive day. So we have been experiencing this since last week, Tuesday/Wednesday, and the appreciation in value of the pound sterling can be attributed to the revised expectations regarding the Federal Reserve's interest rate cuts in 2024, following the release of the lower than expected US job data. Remember, last week Friday we had the average hourly earnings and the NFP, which obviously came in below market expectations. Now, meanwhile, across the other side of the pond, that is from the United Kingdom, the Bank of England is anticipated to maintain its benchmark interest rate unchanged at 5.25%. Remember, this week is the Bank of England's interest rate decisions. We talked about that earlier, and as a result, it's going to be the pound sterling's week, actually, as we're looking forward to this event. And of course, the sentiment regarding potential interest rate cut by the Bank of England has been pushed back to September, reflecting concerns about robust wage growth in the United Kingdom that is contributing to the core inflation. And of course, the central bank is using this as a parameter to measure whether or not to cut or maintain the interest rate. And we also heard about the Bank of England's Governor Andrew Bailey during last week's speech, where he did emphasize that the inflation rate is dropping, and at this point currently the inflation in the United Kingdom is at 3.2%, and their target is 2%. So it's gradually dropping, and we hope that maybe towards the end of the year or towards the third quarter of the year we may likely see interest rate cuts on the Bank of England. But at this point, things are still looking the possibilities of interest rates to be left unchanged is still very, very high. Now let's look at the market drivers that will be affecting the pound sterling this week. Now I have highlighted a couple of them here, which I love to share with you guys on this platform. And let's look at it together and let's see what are the major things that has been influencing the sentiment in the market and what are the things that will be influencing what will happen this week. Now, looking at this, you will see that the first one I have here is the impact of the United Kingdom local elections. We had elections, and the election results have little immediate impact on the pound sterling, so that is not really something we want to consider at this point. Then another thing that will influence the sentiment in the market, that is for the pound sterling, is the weaker than expected US job data. Remember, I said earlier that last week we saw the non-farm payroll come in lower than expected at 175,000, which was below the consensus of about 240,000. Though this is a very good signal for the Federal Reserve, actually, because the Feds are looking forward to interest rates, looking forward to the signs of the high interest rates in the economy, and these are the results they're actually looking out for. Lower than expected job results, which is what we saw. Then additionally, we have an upward revision for March data, but wage growth is moderated, suggesting a cooling labor market, so that is fine. Then we also have the UK economic data. The UK PMI services sector index was revised higher, robust business activity expectations, and there is a weaker pricing that expectation of Dovish Bank of England guidance in the upcoming week. Then also for this week, we are looking at key economic events, which includes the release of the BoE retail sales, which we are expecting this month today, and then we also have the S&P Global Construction PMI. And then on May 9, we have the Bank of England's meeting, which is accompanied by the release of the GDP data, the trade balance, industrial and manufacturing data, and of course we also have the interest rate decision coming up later in the week. That's on Thursday. And then we also have speeches from Bank of England officials, which obviously will be giving us an insight into the economic outlook of the United Kingdom. So these are the major events that will be influencing the sentiment of the market this week, and we will be looking forward to see how the market will gradually be anticipating this event, which will reflect on the chart as price action. Now, talking about price action, let's go back into the chart and start from the daily time frame, where we want to be having an holistic perspective into what is really going on in this particular market. Now, looking at the daily time frame here, my first point of approach is to look at the trend of the market, and after considering the character of price action since the beginning of the month of March, it is quite obvious that the market has been bearish after testing that high at the 1.28940 since the beginning of this year. And as a result of this downtrend, we can see how price action had transitioned into a descending channel. As you will see, after connecting the series of lower highs, we have the resistant line of the descending channel, and then when we connected the series of lower lows, we have the support line of the descending channel. Now, besides this descending channel, we have a key level which will be guiding our decisions for the week, and my key level for this week is sitting right at the 1.25250 level, and as you will see, this level here had played a significant role in determining the direction of price action, at least for the last 4 to 5 months. And look at the structure closely. You will see this area was a buying niche in the month of November last year. It was a buying niche again in the month of December, and during the month of February of this year, it was a buying niche as well, as you will see, and the same thing continued into the first day of the month of April before that level was broken to the downside. Now, as you will see right now, price action last week closed exactly around the 1.25250 level. And one interesting thing about this closure of price last week was the fact that it closed at exactly the resistant line of that descending channel we marked out earlier, as you will see here, making it a crucial moment in this market. We are depending on how participant in the market reacts to both the key level here and that descending trend line, that is the resistant line of the descending channel, will determine if we are going to be buying or selling. Now, the question going into this week is, are we going to be seeing a successful breakout of that descending channel to incite bullish opportunities, or will price action maintain selling pressure below the resistant line of the descending channel and the key level to continue the downtrend that started at the beginning of the month of March? So you would agree with me that we are at a crucial juncture in this particular market. Now, to navigate the dynamic around this beautiful confluence here, we had a simple trading setup on the 4 hours time frame. Now, I like to share with you what is going on the 4 hours time frame after considering the character of price action in the last couple of weeks. Now, here on the 4 hours time frame, we have an ascending channel where price had uniformly gained momentum, finding higher highs and higher lows. And when we connect the series of higher highs, we have the resistant line of the ascending channel, and when we connected a series of higher lows, we have the support line of the ascending channel. So the momentum is looking very bullish in the last 2 weeks in this market. Then you will see the descending trend line we identified, the resistant line of the ascending descending channel we identified on the higher time frame is right here. And look at what happened on Thursday of last week. We saw price break out of the descending channel and then did a retest of the structure, and it appears the bullish momentum wants to continue to the upside from here. So how do we navigate this current structure? Well, we really need to understand how market participant will be reacting to this trend line during the early hours of the week, and the only way we can see that is to scale down into the 1 hour time frame, which happens to be our execution time frame. Now, on the 1 hour time frame, this was what I saw this morning for the first 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 hours of this week. Price action was confined within a range as we saw trading activities trapped within the 1.25575 level and the 1.25380 area to emphasize the prevailing uncertainty in the market at that particular point in time. And usually whenever we have a range bound structure like this, it tells us that there is an indecision in the market, and what we normally do is exercise patience and wait for price action to either break down the support line of the range to give us a signal to sell, or the breakout of the resistant line of the range to give us an opportunity to buy. And look at what happened this morning. Price did break out of the resistant line of the range, and I got a position triggered for me personally. But for those of you who capitalized on this, who already understand our analytical approach in this community, and you capitalize on this, well done and kudos to you. However, if you in any way had missed out on this opportunity, well, there's no cause for alarm. The week is still very early and we still have much more days to capitalize on any trading opportunity the market presents to us. Now, for those of us who had missed out on this opportunity, let's exercise patience at this juncture and see if the market will come back to retest the structure that was broken, that is the 1.25575 level, to incite an uptrend continuation. So let's see if the market will do this. But if it doesn't, then we will be waiting for hold on a second. I want to share with you this level here. So let's allow it to show on the 1 hour time frame. So if price continues to climb up and does not come back to retest structure, then we will be looking at the breakout retest of the 1.26100 level to join the uptrend continuation. So I encourage us all to mark out these levels, most importantly, as we will be needing them as a reference point to guide your decisions. Now, for those of you who capitalized on the breakout of the 1.25575, you will currently be running with about 20 pips thereabouts. So kindly move your stop loss to break even at this point. Let's see how far this momentum will go. Now, in as much as we're looking out for buying pressure in this market, we should never ignore the potentials that sellers could also come in. Now, remember, we have the support line of the ascending channel we spotted on the 4 hours time frame right here, and if price action breaks down the support line here, it could incite some selling opportunities. And look at how beautifully that support line of that ascending channel shares a confluence with the support line for this week at the 1.25380 area. So if price can break down, retest the structure, remember, we need a retest of structure at this point in time to confirm the strength of the sellers, then we will be good to join a bearish momentum to the downside. And if price continues to drop, a breakdown of our key level will finally confirm the strength of the sellers, and we shall be looking at adding more sell positions to our existing trade. So this is my simple view on the GBPUSD for today. So I encourage us all to mark out these levels accordingly on our chart, as we will be needing them as a reference point to guide our independent trading decisions for today. And if you have any questions whatsoever, feel free to let me know in the comment section. So as usual, I will be taking the next 10-15 seconds off. Let's see if there are any questions before we move on to the next asset on our watch list. Stay tuned in, guys, and don't forget to mark out these levels accordingly. All right. So in the absence of no questions, I want to assume that we are all on the same page here. And I do hope you've marked out these levels accordingly. If you have done so, well done. So let's move on to the final asset on our watch list for this week. Stay tuned in. So the final asset we are looking at for today is my favorite asset amongst them all, of course, and that is the XAUUSD, popularly known as the gold spot. And this week so far, the week has started on a very strong bullish note. And first of all, before I go further here, I want to emphasize or reiterate that I already done a top-down analysis on this asset, which I shared on my YouTube, Telegram, and TradingView platform. So for those who had watched it, you will be familiar with what we are looking at this point. But if you had not watched that video, and for educational purposes, you can check the link right in the description box below to have a background knowledge of how we got to this point we are looking at on the 1 hour time frame. So back into the business. So this new week has commenced with a strong bullish sentiment as price action broke out of the descending trend line we identified on the 4 hours time frame. Remember, we had this beautiful descending trend line marked out in our recent video on the XAUUSD, and as you will see, this trend line here has been supporting the bearish momentum since price action tested the all-time high, giving us a retracement perspective to this particular market. And at no point in time in the last 4 to 5 weeks has price action successfully broken out of this descending trend line. And with a breakout of this trend line at this juncture, I'm of the opinion that we might be having a platform for new highs. Now, how do we capitalize on this opportunity? Well, I already shared a commentary on this asset this morning. So for those of you who are with me on my TradingView and Telegram platform, you definitely must have gotten an update as regards to the structure, and I do hope you already took advantage of that bullish opportunity. So let's look at what we talked about here. Now, this morning while I was looking at the chart, I saw here that price action had already formed a range bound structure that is between the 2,303 and the $2,902 area, just right above that our key level at the 2,285. And of course, when price remains above our key level, we want to be looking out for patterns and structures that supports the idea of buying. And if you had watched my video on the XAUUSD, remember that price action is sitting on a robust demand zone, a zone which had consistently negated all attempt by the sellers to break through since the beginning of the month of April. And for me, it's a very good sign that price action may continue the ascent Now, a weaker than expected US employment report that came in on Friday, the average hourly earnings came in below expectation, the NFP came in below expectation, is not helping matters at all for the US dollar, and this will continue to exert selling pressure, except for the fact that we see any data that gives us a resilient economy or an inflationary status data. But at this point, we do not have any major data from the United States except for the Fed official speeches, which everyone will be looking forward to gain some insight into the monetary policy of the Federal Reserve. And the other scenario that could be influencing this market is the easing of the geopolitical tensions in the Middle East, particularly concerning Israel and Iran conflict, coupled with an overall risk on sentiment may dampen the demand for safe haven assets such as gold. So as a result of this observation, we do have a couple of buy positions triggered. I did mention in my commentary this morning that we will be looking at buying at the breakout of the 2,310. I do hope you capitalized on that one. And then we also have a breakout of the $2,320.50 level and open to join the breakout of the $2,325.50 level. Now, for those of us who had already capitalized on this bullish opportunity, please kindly move your stop losses accordingly right now and secure this current position. And if you would ask me, I'm suggesting that anywhere around the second entry at the $2,310 level seems most appropriate to move all stop losses to, while we give enough breathing space for price action to move around. So that is that on that one. Now, for those of us who had missed out on this opportunity, well, let's see if the market will present new opportunities to trade. And one of the platforms I will be looking out for is this descending trend line right here, which was broken to the upside. And from a technical and theoretical perspective, when price breaks out of a structure like this, we expect that at some point in time price may come back, retest the structure in an attempt to continue the uptrend. Now if that happens, that is if price comes into that area between the 2,310 and the descending trend line, we could look out for buying opportunities to join the uptrend move. But if that does not happen and price continues to climb and find new highs, then we have multiple levels, the 2,325 to join and add more buy position, and of course the 2,320 $50 level to maximize the uptrend scenario. So at this point in time, I would only maintain a bullish bias here, but if I see any sign that shows that sellers are coming in at this point, I will definitely give us updates on both my TradingView and Telegram platform. So this is my simple view on the XAUUSD, and please remember to move your stop loss accordingly, secure the current buy positions we have here, as anything could still happen at this point. Now the XAUUSD live window will be coming later today, 5 to 10 minutes into the New York session. And for those of us who do not know, the XAUUSD live window is a platform where we come together to monitor real-time price action on the XAUUSD, and this starts between 5 to 10 minutes into the New York session and lasts for about 5 to 7 hours depending on the volume of trading activity for that particular day. So you do want to be part of that session to see in real time how we take advantage of trading opportunities, and I look forward to seeing you all in the comment section of that session. Now with that being said here, I will take the next 5-10 seconds off. Let's see if there are any questions whatsoever. And in fact, if you have found this content helpful and useful in making your independent trading decisions for today, please support this project. Give it a thumbs up. Your likes are valuable to me, and it also helps the algorithm promote the video to a wider audience of traders. So this simply means that you're actually supporting this channel to grow, and thank you very much as you do so. So let's see if there are any questions before we go ahead to round off for today's Forex Morning Mastery. See you soon. All right. So in the absence of no questions, I guess we have come to the end of today's Forex Morning Mastery session, our first edition for this week. And though we started very late, but I'm very grateful and glad that we were able to take this session, as it's a very important aspect of our weekly routine, as to we need to understand what the market is saying, as so that we can prepare ourselves adequately for the new week. And I do hope this session has been helpful in helping you gain some insight into the current market structure, and of course assisted you in making your independent trading decisions. So I really appreciate every single one of you. Adeni Babalola behind the scenes, Pete from Thailand, I really appreciate you guys. And what else again do we have here in the comment section? Let me see. Simasiku, thank you very much too. Glad to have you around with us this morning. So it has been quite an interesting session. We were able to attend to all the 3 financial assets we are looking at for this week, which includes the USOILSPOT, the GBPUSD, and my favorite, the XAUUSD. And in fact, we were able to identify simple trading setups after understanding the psychology behind the scenes that is driving the sentiment in the market, And I do hope you marked out these levels accordingly on your charts. If you have done so, well done and kudos to you. So all we need to do is exercise patience and allow the structures to mature. And always remember that every decision in the market we make in the market is more or less an educated guess until price action hits your TP target. So with this understanding in mind, I encourage you to have a well-defined risk management strategy in place. Now, for those of you who joined us for the first time, I do hope you are able to gain one or two things from what we discussed here today. And if you did, you want to be part of our subsequent editions, as the more time you spend with us in this community, the better you get to understand my analytical approach, which eventually will help you in making your own independent trading decisions. So I look forward to seeing more of you, same time on Wednesday, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing and of course prepare for another exciting edition as we gradually move into the second half of the week. So before then, we will continue to see in the comment section of both my TradingView and Telegram platform as I give you updates while we continue to monitor price action. So on this note, I want to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye.